One person who can explain to us the importance of GST and how it's going to really pan out is Harishankar Subramaniam, National Leader in Direct Tax Services at EY, Ernst & Young. Good to have you here on the show. It's a pleasure to have you. Yeah. Now, we've seen how nervous markets are really today. It's the P-notes issue, it is weak corporate earnings, China selling off. But the one thing, you talk to any corporate house and the one legislation, one landmark piece of legislation they are only talking about, which is a make or break for the credibility of this government, make or break for the economy, is GST. Explain to our viewers, why is GST such an important piece of legislation?
I mean, to start with, Shweta, like you rightly said, goods and service tax, in my view, is probably one of the biggest reform, at least in indirect tax, this country would have seen since independence. Also, it ties in very well with the Make in India concept for the government's policy thrust. Because basically, what does GST addresses? It addresses the complex indirect tax structure that we have. It brings about efficiency into our indirect tax regime, and it brings about consistency and tries to create a common market, something that every industry in India has been clamoring for. But having said that, what happens in the monsoon session is extremely critical.
Absolutely.
And I really hope is, and I'm an eternal optimist, that I believe the political sagacity will prevail, and we will see the Constitution Amendment Bill passed in this monsoon session, because if it doesn't happen in the monsoon session, then April 1st is clearly a challenge.
Is a challenge.
Even if it happens in monsoon session,
even then
April
it is
1st
a challenge.
is still an ambitious target, because there is so much that needs to be done. It's important that the industry has clarity on the law, on the rules, on the business process, on the GST and on the rates, because this is not a tax reform, This is a tax reform will change every aspect of one doing business in India. Right. So it requires at least 4 to 6 months for an industry to get prepared for GST. So to me, it's a much more than a tax reform. And hence it's important that we get through in the monsoon session. Having said that, the recommendations of the Select Committee could have been better. Right. There still is the distortion of 1% hanging there.
We'll talk in detail about the 1%, but let's just talk about timelines right now. You've said very importantly that monsoon session is critical. Now let's look at scenario 1 and scenario 2. The first scenario, the best case scenario, we get with the GST goes through in the monsoon session. Given that, and you're saying at least a 4 to 6 month window, how likely are we to achieve the 2016 deadline? Is it almost like a certain thing, or do you think there are still question marks there, even if GST goes through in monsoon, whether we'll be able to achieve the 2016 deadline?
Well, if it goes through in monsoon, at least the intent and the stance of the government as of now is to maintain the 1st April 2016 deadline.
Right.
Having said that, there is still a lot of work to be done.
Yes.
You still haven't seen the draft law, you haven't seen the place of supply rules, you haven't seen the business process. The GSTN bid just ended, I understand, on the 6th of July. So there is going to be an award of the system integrator, which I expect will happen only by the end of August. So still April 1st is a pretty challenging and an ambitious deadline.
But not impossible.
Yeah, but not impossible.
Which can be achieved,
something that can be achieved if people and the government will work around the clock to make this achievable.
Now let's look at the worst case scenario, in which is the political logjam that we're seeing in Parliament continues. We don't see parties aligning on a number of issues which we'll discuss in detail, and GST does not get through in monsoon. Now typically one would like to introduce such a landmark legislation only at the start of a financial year. Introducing it mid-year is almost impossible, is that correct?
Well, I don't think so, because this is an indirect tax, so it's a monthly kind of a tax that is made. So there are examples of people having introduced mid-year. April 1st would have been most ideal.
Right.
But I don't really see any challenge in case April 1st deadline for some reason is not met. It could be done a quarter or 6 months away. So I don't think that. I personally don't see it as a challenge. Yeah.
Okay. Yeah. Now let's talk about the visibility with regard to rates. Now that remains the large question. Everybody is also still trying to understand the rate structure and how that will evolve. What is an ideal scenario here on, and what are your clients and companies really telling you in terms of the rates for GST, and what would be the ideal way forward?
Well, the scenario of rates, Shweta, to a large extent is also on the base.
Right.
And we already know that the proposed Constitution Amendment Bill is definitely not going to bring up a very flawless or a perfect GST.
Right.
We have real property outside, we have petroleum products to start with outside, we have alcohol for human consumption outside. So you're talking about truncated base. So you're not going to get a very low optimal rate. Also, we will get a 2-rate structure. I mean, at least
which
a
is again not an
basic
ideal
rate structure, which is not an ideal structure. So the lower rate, in my personal view, could be somewhere around 12% for essential items, CGST and SGST combined, and the standard rate or the revenue neutral rate could be somewhere around 18 to 20%.
But there are those who are talking of higher than 20%, and that would be a disaster.
I don't think that would be politically possible and politically palatable. If you really look at the select committee report, even they have recommended somewhere around 18%. 18%,
right.
I don't know, though it was beyond the brief of what the select committee was, but they have recommended the 18% number. So I don't think 20 is a possibility. Could be 20 or could be 18 to start with, is what is my own view, And
but not beyond 20.
Not beyond 20. And then is it something which the industry will accept with open arms? Maybe not. But that's the reality that we are talking about with the kind of base that we are talking about.
The 1% levy, which in many ways is something people are saying is a retrograde move. It has come as a big dampener, a spoil spot really, at a time when we are talking about this really changing the whole legislation. Explain to our viewers again why that would be a retrograde move and why it should not happen, but why we are going to actually see it, frankly, being as one way of the negotiations finally going through.
So the 1%, let me tell you how that 1% could be really damaging and more damaging than even the 2% CST that we have.
Right.
The 2% CST today that we have is only on sale of interstate goods. The 1%, the way the enabling clause 18 in the Constitution Amendment Bill is worded, it talks about supply, which means interstate, intra-company stock transfers. Any movement interstate of goods without any consideration, even without any consideration which includes stock transfer, will attract the 1%. So the 1%
but isn't that in many ways a bizarre recommendation?
Absolutely, because you can't have an origin tax non-creditable outside the GST chain in a destination-based GST, number one. Second, now that the Select Committee has recommended and they have conceded to the fact that the 5 years compensation should be 100%, I see no reason for 1% to remain. And that's why I'm a little disappointed that the Select Committee has gone for a compromise and has made a suggestion that at least let the 1% remain on taxable considerations. In my view, it should be completely removed. But I think practically, I won't be surprised if that's what happens. They
frankly,
will carve it out.
They're saying that would be only for a 2-year period or.
Well, 2-year period is what it says, but then there is a window open for the GST Council to extend beyond that. And we know in India, when there is a window open, the states would clamor for
and they would exercise
1% for an extra period of time, and that's the worry that the industry has.
Second, have you discussed it with your clients, with your companies? What has been their view on this?
No, there is a complete vehemence and a complete retrograde view that the industry has as far as this 1% is concerned. Second, let me tell you, people were waiting for GST because they really wanted to create a supply chain in India which is more commercially driven and market driven rather than as a tax arbitrage.
Right.
Most of these companies today have a multi-warehouse structure in every state just to avoid the 2% CST.
Right.
Now with this 1% origin tax wasn't there, they would have really looked at the entire supply chain network design. But with this 1% that becomes an impediment, and that's precisely why the industry is really upset. And there is no place for an origin tax non-creditable outside the GST chain to be existing in a GST when there is a complete compensation that has been assured by the central government to the states. So in my view,
in many ways
take
away the whole essence of GST. In many ways, takes away the entire gains that one were to make from the passage of the GST.
In fact, it gives a very skewed view. To start with, we have a truncated base. Then you have a distortion in the form of 1%, which is an origin tax. So fundamentally, I would say it's a compromise. It's a huge compromise.
But would you say, Mr. Subramaniam, that a compromise is better than nothing at all?
Well, let best not be the enemy of good is something that we all say. So I'm saying practically that is fine. So I'm saying that even if this 1% is repealed, okay, we may not have a complete full base as far as the GST is concerned. I'm still willing to live with it and probably iterate and tune it as we go along. But the 1% is to me still a distortion.
A full base is almost a given now that will not come through, because that is something that the states are not going to agree on, and that is something we have to live with, that yes, it's not going to be a full base. We have to live with that imperfect GST bill with the entire base not covered. But what you're saying is that two factors which will be a make or break for GST is whether or not this 1% goes through, and of course finally the rates that we get.
Yeah.
So
that could be the I would say the proof of the so-called GDP kicker that you get by implementing GST. The real proof of the GDP kicker will come in by what the rates are, and to some extent rates are linked to the base, and the fact of this 1%, which is still a distortion.
One last quick question on fears around price hikes following the implementation of GST. Are those fears really real, and are they misplaced?
See, as far as pricings, margins are all concerned, it will depend from sector to sector. I did mention the fact that GST is not a tax reform. It's a complete business reform. It will have impact on prices. It will have impact on margins and so on and so forth. But each sector will have to really assess what it is. So it's too early to call the jury on that because we still don't know what the rates are.
Okay, I know we were meant to talk only GST and reforms, and I want to quickly pick on your experience and your interactions with the industry at a time when markets are falling and tanking. We could quickly pull up the markets because as we were speaking, we've seen markets fall further. It's 159 points off on the Nifty right now. So the sell-off is continuing as we are inching towards the end of today's session. 547 points off on the Sensex. Now, what many would say is that worries around the real economy are reflecting now on the Lal Street, on the markets, and you're someone who interacts with the industry at a level in which we know what are the fears. Give us a sense overall of what the industry is feeling right now. What are the concerns around the real economy, and some of them clearly reflecting on the markets?
Well, frankly speaking, the answers are quite mixed depending on what sector you speak to. But what really is the worrying concern for the industry is that the pickup in the economy has not happened as what people had anticipated. There was a huge expectations and hope from this government. Okay, it's been a short period of time. So still there is some work to be done on the ground, but fundamentally the pickup is not being seen, and that's a concern. And that's why if GST also doesn't meet its deadline on April 1st, or the monsoon session really doesn't see the passage of the amendment bill, it will further spoil the sentiments.
All right, good talking to you, Harishankar Subramaniam. Pleasure to have you on the show, and thanks for sharing your perspective on GST and the overall sentiment there in the markets. And as you can see, GST clearly will be a make or break. We're seeing worries around a number of issues. Corporate earnings not looking good, global sell-off happening due to China and the worries there, and now fresh worries around participatory notes and the regulation there. All of that showing an impact on the markets today that are clearly selling off in a big way.